Good morning. Good morning. Welcome. We're going to just give it another minute. We had a lot of people registered and they're just all starting to fill in now. So just let's give it one more minute and then we'll get started. Okay.
I'm admitting people as they come in.
Oh, this is a good group. Look at this. This is very good. For the dog days of summer, look how many we have now. We're up to 42. Okay, one more minute. We'll start at 11:03.
It's a superstar cast. Who wouldn't want to listen to us chat? Robert, DiPaolo, come on.
No, nobody's here for me. They're here for you, Arlen and Jess, not for me.
And Jess?
No one's here for me.
She needs no introduction.
No. Oh, yeah. I try to get on a call with Robert every day just to hear him.
Yeah, just to hear me ranting.
I think I'm going to just start doing it, like 4:45 calls, end of day.
Just call me. Yeah, just call me.
Are we just going to set up a standing meeting?
Sure. We should go through our rose and thorns every day and just reflect on the day.
All right. I'm going to start. We're at 46. We're trying to get everyone out of here at noon. So let's get going. Thank you everybody for joining. I know it's it's peak holiday time for everybody, but we do appreciate it. And I think we haven't done a lot of these this year. Last year I did a lot more presentations, so it's kind of good to be back doing these things. Even though I'm not really doing it today, I'm just introducing our speakers today. Just some thoughts. I think it's been a really interesting year. We have all the political, we have all the economic stuff going on, and then we have these record maturities going on. But I also think it's been a year, and sorry, I'm dealing with a respiratory thing here, so I may start coughing. But I think it's also been an interesting year from a point of brokers reinventing themselves. And this is not something that's new. This is something that's been trending for many years. It just seems to have been accelerated in the last year. And that's likely with the banks being more aggressive and, focusing on rate. And again, it's difficult. It's an uphill battle for a lot of you because people want rate. And in an environment that we're in right now where everything is so expensive, groceries, gas, everything, I think with mortgages, they feel like they have some sort of control. It's something they can negotiate because you can't negotiate many things in life, but I think that's the problem. And the banks are they're taking it and running away with it. And it's an unfair advantage that they have in that they can offer whatever rate they want. They can't offer advice. They can't really help anyone. And rate never really helped anyone pay a mortgage off quicker. We can see that by the debt levels that are going on, but they do control it. So I know there's been brokers that are thriving, that are reinventing themselves, and whether that means they're going, for tax advantage strategies, for wealth building strategies, or they're just helping people pay their mortgages off faster. Brokers are just so resilient and so resourceful in that they're saying, okay, we're going to shift. The bank is going to do this, we'll shift. And if you think of it, and I'm not just saying this because I'm in this industry, but I think Canadian mortgage brokers are the best salespeople in the world because no one has to endure what you guys have to go put up with the banks. They control everything. They fund this industry and they can turn it on whenever they want and offer rates that you just can't offer. So it's really important that we try to shift. And I think that's what's happening. I mean, the shift is accelerating. But again, for those brokers that are still struggling, I'm going to do a call next week. I'm going to do it next Thursday, September the 3rd. It'll be a lunch and learn. I'll call it Manulife 101. And I'll just kind of go over my sales approach. So if you are struggling, maybe you'll want to join for this. So we'll do it at 12:15 next Thursday, September the 3rd. And we'll kind of go through, because I have a different philosophy. I believe with my background being a financial advisor for a lot of years, I like to get in the weeds. I like to talk to your clients. I think that makes me a better BDM because I see what you guys have to go through. But I also think it helps you sell the product. I don't do a lot of presentations that are just talking about the theory of the product. I like to get in the weeds and really help you sell the product. So that's what we'll do next Thursday. So if you are struggling and you want to join this call, it'll be really an open session. We can do some role play. We can look at some case studies. We can just kind of go through my sales process and go from there. Next thing I want to challenge, I guess because of, I guess a lot of people talk about Manulife One as being a niche product, and I really don't like that term, and I kind of challenge it because I just pulled up some stats this morning. 73.7% of Canadians have a credit score above 700. And if you break it down, 15% are 700 to 749, 18.6 are 750. So that's good, 700 to 749, that's a good score. 750 to 799, 18.6%. That's very good. 19.1, 800 to 850, which is an excellent score. And believe it or not, 21% are 850 to 900, which is exceptional. So again, you can look at it and say, that's not niche. There's a lot more people that can take this product than we're actually looking at. I think the struggle comes down to how to position it. And that's, I think, challenge that a lot of brokers have. And maybe that's something we can address next Thursday. I'll be away in September. So lucky for you guys, you get to deal with Jess. I'm away September 3rd to October the 6th. So I feel bad for Jess because you're going to have to take a lot of these calls, but I don't often ask for support, but being away for that period of time, I'm kind of worried about my numbers. So if you're looking to support it or send a deal, please give Jess a call during that time. She's been 17 years with the bank, so 9 years, correct, on the bank side, mostly on the advisor side. So she knows her stuff cold. So yeah, please reach out to her. But also use Brett. If you have rate exceptions, try using Brett, but then if not, use Jessica. Trina's also here. I don't know if she's on the call today, but Trina, she makes everything happen. She's behind the scenes and no one ever sees her, but she makes our lives a lot. And then we found this guy just kind of wandering around, so we thought we'd bring him into the presentation. Arlen is the VP at Tembo, sales and marketing. He's VP sales and marketing for the last 6 years. He handles all of Ontario. And I don't know if this is true. He told me he was up for an excellence award for BDM of the year 22, 24, and 25. Could be true.
It's true. You can check the CMA website.
Right. We applaud you. So it's funny because I got calls from brokers when this invitation went out and said, was this supposed to come out? Like, how are you guys involved in this? I'm a big believer of collaborating. I think brokers should collaborate all the time. I think it makes us better as salespeople in the whole industry. I think is improved when brokers do collaborate. We don't compete with each other. We compete with the banks. And the more brokers that can share best practices or work with other brokers, it just strengthens the entire industry. Lenders can also collaborate. And it's not often that you can say that, but in this case, Tembo has a product that can make selling our equity products a lot easier. And if this is something that's going to help your business, then we're happy to present it to you. So I believe we're going to go to Jess first.
Yeah.
So we'll go through and then we'll do, if you have questions, just ask them as we're going through, or just put up your hand or use the chat, whatever you want. We're going to have a full Q&A at the end, but just ask anything as we're going through. Okay, Jess, take it away.
Yeah, so just to Robert's point, we are looking to have this be interactive. So if at any point throughout the presentation you have any questions or anything like that, you can either use the chat function. I'll be monitoring that, as well as Trina, or you can just raise your hand as well, and Robert will call on you. So feel free to ask any questions throughout. So before we got started in regard to how Manulife Bank really partners with Tembo Financial, we thought it would be a great opportunity to also go through Manulife's suite of products. So the solutions that you as brokers have available to you, we're obviously known for our flagship product, the Manulife One, but I find that it's nice to remind brokers that we do have a traditional standard mortgage that is our Manulife Bank Select. So it is for insured and insurable files only. So really great product. It acts as a bank account as well, or it has a bank account associated to it, I should say. It's not mandated. It's just an added bonus for a client. One of the ways that we do differentiate, or that makes this product phenomenal, is the pay down flexibility for it. So, if you have a regular traditional mortgage, that clients are going to be limited to either a 20% prepayment privilege or increasing their payments. We actually allow both, so that not only can they do that lump sum prepayment, but they can also increase their payment by 25% once per year as well. So especially for those clients that are looking to become debt-free sooner, or maybe you as their broker has actually set a plan in place for them to start off with the Manulife Select, then transfer into the Manulife One once they have that 20% equity. This is a really great way to do it as well. We do cover the closing services by FCT and FNF as well. So that is something that Manulife Bank covers. And we do have both a fixed Manulife Bank Select as well as our variable. Now, important thing to note here is that it is a true variable rate mortgage. So the payment is staying the same for a client that is looking to have those structured payments. However, if Bank of Canada prime rate goes up, then those payments are going to be allocated a little bit more toward interest. If it goes down, they're paying more principal. So it is a true VRM mortgage over here. I did touch on the fact that if a client hits 20%, maybe that has been a strategy you've put in place for them to move into the Manulife One solution. That is something that we can do, keeping the same account number that they've had with their Manulife Select. So this offers a client an opportunity to either upgrade into a Manulife One product, no problem at all, or maybe they're just moving homes, they're either upgrading or downgrading and they want to keep the same thing. We can do that and just do a product switch or
Jess.
a port. Yes.
Jess, I have a question.
Yes.
You literally took the words out of my mouth and I was going to be like, can't you switch to a Manulife One?
Yes.
How much is it? And do they just do it internally?
Yeah, so really great question, Amanda. So you guys actually have a dedicated internal person. His name is Greg Packwood. He's honest to goodness phenomenal. So if you do have either a port or you do want to do a product switch into a Manulife One, Greg Packwood is the one to do that. Robert and I can connect you guys at any point in time. It is a $250 cost to do it. A lot of the times we can get that reimbursed for the client. The beautiful thing about that is because it goes internal and Greg handles that, we then actually pay for the new appraisal and we also pay for the registration. So the FCT and FNF costs there. So it's a great benefit to your client to go through Greg and our internal channel. Now, if there is an increase in the limit as well, over 50K, we're also going to pay you guys 70 beeps on that increased amount as well. So we're not cutting you out of it. If anything, Greg's kind of doing all the work and you're still getting paid for it. And the clients are getting a cost break. So it is a really great process and something that, if you do have this in future, Robert and I can always connect you with Greg. But great question. Thank you. All right. So moving on to our flagship product, our Manulife One. And I think if we can just go back just one, Arlen. Thank you. I think it's good to note the ways in which we truly differ from a traditional mortgage, because it's great to go over our product, but it's important to also showcase how we truly differ from those traditional mortgages. So as brokers, you guys are all very familiar with this. That, with the standard traditional mortgage, interest is front loaded. Predominantly, those payments go toward interest for the first 7 to 10 years. Biggest difference with the Manulife One is that it's simple interest that is calculated daily and charged at the end of the month. So if you have a $100,000 mortgage and your clients get paid $5,000 at the end of August, because that adheres to their pay schedule, their mortgage balance is immediately dropping to $95,000 as soon as that money hits the account. Now that is all that they're paying interest on. So a different way in which we calculate interest, obviously traditional is compounded. We're doing simple interest daily. Again, when we talk about principal pay down, we talked about those limitations, right? 20% prepayment privilege, or they increase it. Majority of Canadians don't do that because they just don't have the financial flexibility to do it, or they like to have any excess money or any surplus sitting in a bank account for a rainy day, right? Nobody wants to give RBC the 20K that they have sitting there and then have to get something on their car fixed and go back to say, hey, I actually need 5,000 of that. They're going to have to take that out on a line of credit or something else at a higher interest rate. Whereas with the Manulife One, we don't limit principal pay down whatsoever. So whatever's in the main account, fingers crossed, you win the lottery tomorrow, you can pay that puppy off. You can pay that off without penalty. So really great opportunity there for those clients that truly are looking to get out of debt sooner. And then again, for every payment, we kind of went over this, portion goes toward principal, portion goes toward interest. Whereas with the Manulife One, every dollar goes directly against the principal primarily. So we do have a couple different variations of the Manulife One. I like to refer to it as, the Manulife One is this tree and we have different branches of it. Our standard one is the trunk. So this is like our standard program. It's an 80% loan to value. 65% of that can be fully revolving. And what this is that this is going to be for standard income clients that can fit those 39-44 ratios. And the rate is going to be prime plus a half. Now with our standard, actually with any of our Manulife One products, you do also have the option of having fixed terms as a part of it as well. So for example, anything over and above that 65% LTV does need to be locked into a fixed term. So you get to choose it. You get to choose the amortization, that sort of a thing. But a client can have a split even over and above that 65% of sub accounts. And again, if you want to get more into the details on this, that's something that Robert and I can take offline and schedule a separate meeting with you just to go over the different ways that you can tailor the Manulife One. But I will say that that's one of my favorite things about this solution is that number one, you get to differentiate yourselves as brokers in this industry because you get to tailor a solution for a client, and no two Manulife Ones look the same. So it's really advantageous to add to kind of your toolkit of services that you have to offer clients. So that's our standard program. Very simplistic, very comparable to a Scotia Step or a TD Flex line, with the added bonus of it is a bank account. So your income is going directly into it, affecting that right off the hop. Now, I know Robert said he doesn't like the word niche, but these I will say are what are qualified as our niche products. So our small business owner program and our equity advantage. They're fantastic to have as part of your arsenal as a broker because they can work for those average clients that may not fit those 39-44 ratios, where you may think, oh, they're, you know, a business owner, they're not claiming a lot of income. We now need to move over to the B side. That is not the case here. They're two really great solutions that you have available to you. So number one, for our small business owner or BFS product, it's a 65% LTV. 50% of it can be revolving. Now, one of the greatest things about both of these products or different variations of the Manulife One is that TDS goes up to 70%. So we don't worry about GDS with these two products. A client can go up to 70% TDS with, as you know, as BFS individuals ourselves, is going to be very important. The thing here is that we don't allow for debt consolidating. So we do with our standard for our small business owner for our equity advantage, we don't allow for debt consolidation. And this is where Tembo is going to come in and Arlen's going to talk about how we can really collaborate to still cross that finish line here, but still a really great solution to offer for those BFS individuals. One specific thing to note here is that this is not a stated income program. So client does have to have 2 consecutive years of 25K claimed. They do have to have a 700 beacon score. So there are some things that we still do need to see. And because it is a specialty product, there is a rate bump up on it as well. Whereas with our standard M1, we're at prime plus a half. For our small business owner and our equity advantage program, those are at prime plus 75 beeps. So a good option there. Now, our equity advantage, and this is like prime of the prime, Cadillac of it all, because it is a fully revolving 65% LTV solution. So this one as well, prime plus 75 beeps because of the type of solution it is. But again, what's really good here is that clients can go up to a 70% LTV. And this actually comes into play for our small business owners product as well. Let's say you have a client and their LTV is at 103, or not their LTV, excuse me, their TDS is at 103%. What we can do is then look to do a net worth test for both of these programs. So what we would be then looking for is 2 times the limit amount in net worth. Any additional housing or anything like that counts toward net worth, as well as equity within the subject matter property. And then we're also going to be looking for 1.2 times liquid. So that again, we would be looking at additional assets they have, cash they have, equity in non-subject property homes, that sort of a thing. But we are providing you opportunities to get a client into a solution. So this one is really good for high net worth individuals, as well as pre-retirees and retirees before you need to take a look at a reverse mortgage potentially. So again, I talked about how there is no debt consolidation to be able to get here. So this is where Arlen's going to take over for it. But that is exactly why, you know, I think it is important, to Robert's point, to collaborate, to bring everybody together, because at the end of the day, we want these deals to go go across the finish line for you guys as brokers, as clients, and partnering with people like Arlen and Tembo is how we make this happen. For minimum that we require for our SBO and equity advantage products, that's where we can partner. If they do have some debt that we're not allowing you guys to consolidate, but Tembo can help out with that, that's where Arlen can come in. So if your client can't check every checkbox, but you know that the Manulife One product is the best thing for them, this is why we're putting on this webinar right now and going to have Arlen walk you through kind of where Tembo comes in, where they are, and some case studies as well. So I'll move that over to you, Arlen.
Yeah, awesome. Thanks, Jess. Really appreciate it. Great presentation. Thanks everyone for taking the time this morning to learn about collaborating Man One and Tembo. There are a lot of people on the webinar. Some may be familiar with Tembo, some may not be. So just want to give you a quick run through of who we are, what we can do, and how we can help. We are a balance sheet lender. We're a private lender. So we're not a MIC. We don't syndicate or administer any mortgages. We're lightning fast because we have our own money. We legitimately can provide deal feedback within an hour. So when you're collaborating and you're working with Robert or Jess on a solution, we can step in and give you clarity very, very quickly. We can customize solutions, which allows us to enhance that collaboration aspect as well, because we're so nimble and we can make decisions quickly. We love a good story, understanding where the clients are today, where they're trying to go tomorrow, and we can truly customize solutions to get your clients there. I think in this dynamic market that we're in right now, customer service and strategic solutions are what will set a broker apart. And our whole goal is to make you look like a superhero to get your clients where they want to go long term. And this collaboration here between Tembo and Manulife is fantastic because we can understand what the long-term goal is for your clients, and we can provide a short-term bridge or short-term solution to get them to where they're trying to go. All of our fees are 100% transparent. We ultimately want to make you look like a superhero so you can nurture your clients throughout the entirety of their mortgage journey. So I'm going to go into a few real life examples, clients that we've helped in the past where we've been collaborative, real life people, real life scenarios, so you can understand exactly how this collaboration works. So our first scenario was long-term cash flow is the end goal. It was a single mom raising 3 growing boys. Their first mortgage was coming up for maturity. They took on a little bit more debt than what they were anticipating. As we spoke about earlier, Manulife doesn't pay out unsecured debt. So the long-term goal is to get into a Manulife scenario so they can free up cash flow and live comfortably and raise these boys how the mother wanted to raise her family. So the equity advantage was obviously the long-term solution, but the hiccup was that they had unsecured debt. And so the Manulife solution wasn't the short-term solution just yet. They needed to come to Tembo to pay out their unsecured debt. So what did we do? We gave the clients a $55,000 second mortgage as a debt consolidation loan. We paid out all of their unsecured debt very quickly. The lawyers paid everything out. It was quick. It was easy. We paid out $45K worth of their debt. We covered all of the fees. We helped to remove that qualification roadblock with Manulife of the unsecured debt, which allowed them to unlock that Manulife solution long term. We were just that bridge loan to get them there. So this all happened very quick. I spoke to the broker in early December 2025. They said, look, I want to take my clients to Manulife. It's the best product for this scenario. The only issue is they have unsecured debt. Can you help? Well, we don't worry about GDS, TDS. We really just care about affordability and the exit strategy in this scenario and the fact that they've got equity in their property. So we worked out the numbers, we got all the details, and very quickly within an hour, we underwrote that a Tembo debt consolidation loan was the short-term solution. So we closed December 24th, call it a Christmas miracle, call it what you want, but we paid out $45,000 of unsecured debt just before Christmas. And then the broker in the background was working with their lovely BDM at Manulife. They got the deal approved because all of the unsecured debt is now a secured second mortgage on title. Manulife came in, provided a commitment, and the broker worked fast, worked with the client to explain all of the process that needed to happen in order to pay out their second mortgage. We provided them, I forgot to mention, it was a fully open mortgage. So we were working on the broker's timeline. We had a rough idea of when it would close, but there's a lot of moving parts when you're trying to streamline everything. So Tembo's able to offer fully open mortgages, so there's no penalty to pay out the solution, which provides flexibility not only to the homeowner, but also to the broker. That way they can breathe, they can work on their timelines. We know you brokers are super busy. So if you can't jump and you're going on vacation, don't stress. We give you that flexibility to work when it's convenient for you and your client. There's so many times where clients, especially right now, they need money, they're on vacation, we got to wait a week for them to close. So Manulife was able to close on January 19th and pay us out. So what did it look like and what did the clients walk away with? I kept talking about this, $45,000 debt cleared. So Tembo came in, we provided a $55,000 second mortgage that covered the $45,000 of unsecured debt. We helped to improve the cash flow long term. This was the Manulife solution. It was a customized solution. It was fully open. We gave them the money that they needed on the timeline that the broker needed. David, yes, sorry. What is your question? I don't know if you can have access to your mic, but feel free to post in the chat. If you want, write the question and then we'll cover it in a few slides when we're doing our Q&A. So we allowed the client to access their equity short term in order to pay off their debts, to provide them that strategic solution, which was a long-term solution, the Man One. So this was a very customized approach in collaborating where the broker knew long-term the right product for the client to set them up for success, to get them where they wanted to go long-term. There was a roadblock, which was unsecured debt. Tembo stepped in. We provided a debt consolidation loan very quickly. I think we funded in about a week and a half after we got an appraisal. We can fund as fast as 48 hours. So we're lightning fast, not only to provide deal feedback within an hour, we can get a commitment out to you in 4 business hours. And if it's a rushed deal, like if your client needs to get this cleaned up and move forward quickly, we legitimately can fund in 48 hours from application to funding. So we move quickly just to get your clients to move forward with ease. And then, so just so you understand,
Arlen, I'm just going to jump in just because we did have a couple questions come in.
Sure.
I know we have our Q&A, but
no problem.
And this is probably something you'll hit on a bit later. Ivan was asking how much the extra cost was for getting the small second mortgage, lender fee plus 2 lawyers. Amanda, gem that you are, jumped in here to give a bit of an idea there. But did you want to touch on that?
Yeah, sure. I mean, we underwrite everything on a case-by-case basis. Location, credit score all play into the total cost. But we have some of the cheapest legal fees in the private lending space. They start at $14.50 plus HST. That includes title insurance and disbursements. Because we do a lot of these smaller bridge loans, $50,000, $70,000, $80,000, we have ILR that we can refer your client to that only charges $600 plus HST. So legals are around $2,300 for both lawyers. All in all, from origination to payout, we're somewhere between $5,000 to $6,000 on a short term. But because we can underwrite so quickly, if you have a live file and you want to get a better idea of what the cost is from origination to payout, give me a shout. We're 100% transparent. Our discharge fees are only $925 all in. That includes our lawyer fee, our discharge fee, and our statement fee. So there's no setup fees or walkthrough fees or admin fees or anything like that. It's really just our lender fee, a broker fee if you're charging it, our legal fees, which are some of the cheapest in the private lending space, the interest rate, obviously, but since these are open mortgages, very short-term bridges, the interest rate is less important in these scenarios, and obviously our discharge fees. So I can help to kind of break down what the costs are, but I can tell you that time and time again, the cost is more or less irrelevant, because if this is just a short-term bridge to get them to where they want to go long-term, if you can't get them to where you know is their best solution, then where are you going to take them? The alternative might be a much more costly option than being able to move quickly with open mortgages and having that flexibility to get them to where you know that they need to go.
So David did throw his question in here, and he said, did the solution include Manulife taking out the second? So Robert did identify this one just to say, yep.
I'm getting to that right now. So here's just a timeline and kind of the structure of how it moved forward. So the broker came to us. They had unsecured debt. They identified that the Manulife product was the right product for them. The only roadblock in this file specifically was the fact that there was unsecured debt. Manulife can't pay out the unsecured debt, so they came to Tembo for that debt consolidation loan. We provided a commitment and funded the mortgage. We then paid out all of the debt, so the debt was completely 100% cleared. They then qualified at that point for the equity advantage. The broker on the back end, obviously, I'm not seeing the day-to-day communication between the broker and Manulife, but the client was qualified at that point for the equity advantage program. They got the commitment signed. They did everything that they needed to do, and then Tembo is paid out in mid-January. So I think it was only like a 45 day from the day that the broker called us to when Tembo is paid out. Because this wasn't a credit issue in this scenario. This was the fact that they only had unsecured debt that couldn't be paid out from Manulife. So this was a very quick open solution to really get over that hurdle, to collaborate and get the client moving forward very quickly. So yes, Tembo is paid out with ease. Manulife paid us out quick, easy. One short-term bridge, one long-term solution, which was the Manulife Equity Advantage Program. One happy family. This mother was able to now move ahead in a longer-term solution with ease and afford the lifestyle with 3 hungry boys that play sports and all of the stuff that 3 boys, the expensive lifestyle they have. And the mother was a single mother, so just on one income. The next product I want to talk about is, again, it's a very quick solution, a short-term bridge, 60 days in and out. This time we're talking about the hurdle being a credit score. So we had a client, as we know, or as all of you know who are familiar with Manulife, and since Jess did such a great presentation earlier, the Manulife minimum for credit score is 600 for the applicant, and then the co-applicant is 650. So this client that came to us, obviously it came through a broker. The only hurdle in this file was the fact that their credit scores were just a titch lower than what Manulife's able to approve. We had to pay out some debts to alleviate that utilization on their credit score. First client, the main applicant was 691, or as you brokers call B1. It was 695, and client 2 is 641. Equity wasn't an issue in this scenario. It was just the fact that they had a little bit higher utilization on their credit score. No missed payments, just higher utilization than usual, which was impeding on their credit score. We gave them a $35,000 second mortgage. We paid out their debt. We covered all of the costs. In this case, it was about a $5,000 in and out, including legal fees, lender fee, broker fee, discharge fees, and interest. It was a fully open mortgage. Once again, we do this all the time. Fully open mortgages. We allow you to move forward on the timeline that works for you and your client. It doesn't cost anything extra. It's just our service to collaborate and make these longer term solutions possible. So we paid out the debt. We lowered the client's overall utilization. Within 60 days, we got paid out by Manulife because we were able to increase the credit score quite substantially. 2 credit scores increased in about 60 days. So the client 1, the main applicant, went from 695 on March 6th. The broker pulled their credit score May 5th. They realized that their credit score did increase quite substantially. And then on May 12th, Manulife, because they moved so quickly as well, paid us out. So it was quick, easy. Applicant one, they went from 695 to 776. That was an increase of 81 points on their credit score. Client two increased from 641 up to 692. That's an increase of 51 points in such a short period of time. So just a point for all of you brokers. I don't know if you were on my earlier webinar with Eric Pobletti from Equifax, but utilization plays a huge role in impeding credit scores. Other than missed payments, and again, I'd have to go back and look at his great diagram that he had, but utilization impedes credit scores substantially. So lowering utilization on your credit score allows credit scores to skyrocket in many cases. Obviously, every person's scenario is different, and I can't guarantee anything. Yes, 30% of the credit score dynamic is utilization. So it's an incredibly important thing to consider when you're working with Manulife or trying to fix your client's credit score just in general. Coming to Tembo to do a debt consolidation is very important. And because we have open terms, you can get your clients out of a private mortgage very, very fast. And I want to mention that, look, you're going to Manulife after the fact. So when I talk to a lot of brokers and they're like, oh, I don't do private mortgages, we get that. But in this day and age, when you need to be strategic, when you need to think outside of the box and provide Band-Aid or bridge solutions to get to where you want your client to go long term, private mortgages, especially when we can collaborate and you provide open mortgages, transparent pricing products that give you peace of mind and give your client peace of mind. This is the new age of where you're able to leverage short-term private solutions to get your clients to those A-type solutions like a Man One. So in this scenario, 60 days, we increased 2 credit scores. We just gave that bridge solution to lower their utilization, pay off their debt, so that broker could then get the client to where they needed to go. So I see some Q&A here about costs. And again, we underwrite everything very quickly. We underwrite everything on a case-by-case basis because we can do it. We have the capacity to turn around concrete answers about your specific scenario within an hour. So today I'm just going to be talking about very top level. If you want to learn more about us or you want to go through a deal run, pick up the phone or shoot me an email and we can talk about your scenario. I'm going to let Amanda chime in later just about how real the timing and the turnaround is. Not quite yet, Amanda, because I know that you're itching to do so, but we'll wait until the Q&A. But our LTV right now, we're sitting at about 65 to 70% LTV. We're in a downward market right now. So 65 to 70 is a perfect sweet spot to provide that flexibility to get your client refied out elsewhere. No appraisals on low loan to value deals. This is on a case by case. Obviously, the market's crazy right now. So, an appraisal is worthwhile getting for your client. But on low LTV deals, we might be able to waive it. Our fees start at 2% for first mortgages, 3% for second mortgages. Same day commitments. We can provide you legitimately a commitment within 4 business hours, funding in 48 hours from application to funding. No income verification in many cases. Obviously, if you've got the documents, it's worthwhile for us to see it. And especially if your end goal is to go to Manulife, you can leverage Tembo to get those income documents before you're then going to Manulife. So it just helps to make your business more efficient, get the documents fast. So when you achieve your goal of lowering utilization, increasing credit score, paying out unsecured debt, paying off taxes, whatever your goal is with the Tembo product, you'll have those income documents to then send over to Manulife. And then we can be flexible. We're 100% flexible. We want to customize solutions that will help get your clients where they need to go. So open terms available. If they want to be prepaid, we can do it prepaid. If they want to make payments, they can obviously make payments. For these 45, 63-month mortgages, really doesn't make sense for them to pay principal and interest. But if you're adamant on that, they can pay principal down if they want as well. And then before we go into the Q&A, I just want to talk about a product that we put together, which is really just a thank you to all of our brokers that we work with. It's our volume bonus program. I just want to talk about it. I'm not going to go into detail about it, but we do offer a volume bonus program. It does pay in gift card rewards. It's very lucrative, and it's really just our way to say thank you for brokers that fund deals through Tembo. It's either the number of deals that are funded through Tembo or the dollar amount that's funded through Tembo. It's all cumulative. If you hit the platinum tier, which is definitely a feat on the private side, but it is possible, you can make upwards of $30,000 in gift card rewards. We've got brokers who have done renovations on their property. We've got brokers who have taken their kids to places like Great Wolf Lodge. There's people who have flown and gone on vacations where they may not has necessarily done so. And as you can see, the tiers are quite achievable. And because they're cumulative, if you hit the kickoff bonus, it's only fund 3 deals with us, minimum $300 gift card reward. It's only an additional 2 deals to hit that bronze tier. So once you're in the volume bonus program, it's very easy to increase and go up the tiers. My tip is start early in the year and submit often. Obviously, we're not going to be able to fund every single deal that you submit to Tembo, but if you start, say, January 1st or January 5th, and you continuously ongoing submit deals to Tembo, you have a much higher likelihood of increasing your chances of going and ranking higher in the volume bonus program. If you want to learn more, give me a shout. Happy to talk about it. I'm very proud of this, but I don't want to pump Tembo and our products because this is a little bit out of topic for our collaboration focus today. But I'm so passionate and I love this product, so I just wanted to pump it very, very quickly. I'm gonna send it back to Jess.
Yeah, so we do have a couple of questions in the queue, so I'll review those. I know we already dealt with a couple, but Leo's asking whether Tembo will lend in Northern Ontario, more specifically Sault Ste. Marie.
So Sault Ste. Marie is great question, Leo. Sault Ste. Marie is an interesting place. We find that there's not many owner-occupied homeowners that live in Sault Ste. Marie. We will consider lower loan to value owner-occupied, but if you're dealing with clients that are real estate investors and they've got a portfolio of 5, 10, 15 properties in Sault Ste. Marie, if they're not willing to collateralize their owner-occupied property, we're likely not interested in Sault Ste. Marie. Right now, in this time that we're in, I actually urge you, if you do lend in Northern Ontario, specifically in Sault Ste. Marie, take a look at how many listings versus how many sales there have been this year. I haven't looked in the last month, but when I looked in late June, early July, there was about 11 sales and about 250 listings currently in Sault Ste. Marie. What we found during COVID, people were buying up those properties like crazy. And now that the market has declined quite substantially, it's very difficult to find buyers. There's not a lot of job opportunities in Sault Ste. Marie unless you're living there and going up into the mines, or if you work for OLG or other government type employment. So Sault Ste. Marie, long story short, is on a case-by-case basis. If you have a live file, happy to chat with you about it and learn more.
Awesome. Thank you. Okay, so the next one, and maybe Amanda, you can actually touch on this one because Ethan is asking for the lender notes. Are we just advising the client took the second mortgage to consolidate debt? What have you done in your lender notes, Amanda, to chat about this? Or do you even mention it?
Where's the mic? Oh yeah, I have to mention it. Manulife, like if you don't write every single thing to Manulife, like saying like I want my main account to have this amount of dollars, this amount of funds, not advanced, they will not do what you want.
We like details, people.
Very detailed. So I say in there, I have a Tembo second. I'm paying out these secured debts or these unsecured debts. That's why it's listed prior to advance. The Tembo has been placed in here to pay out these debts. We are paying this out at closing. I have had 0 issues.
Awesome. Appreciate it.
I think it's been 4.
4, maybe 5
Maybe 5. It's
this year.
been a process for a bit now.
She's on her way to platinum, guys.
She's on.
Oh gosh, no.
She's well on her way to platinum for sure.
I did get
Well,
the
I
I did get the bonus tier.
Whoa, whoa,
We're-
whoa, whoa, whoa! Don't be talking about trade secrets now.
I might be.
I'm just
the
joking. It's
lowest-
out there. You fund
If
deals
we
with
would've-
Tembo,
if we
you get
would've-
rewarded.
Well, I might be the best. I'm the lowest producing volume broker with Tembo.
Probably.
Do you
Yes.
get an award for that?
For you,
now.
I'll make an award for sure.
Perfect.
The next question I'm going to shoot your way, Robert, because one of the questions we has is what type of auxiliary incomes does Manulife accept? So things like CTB, foster maternity, LTD, etc.
Oh, you're throwing that to me. Thank you.
That was the agreed upon thing.
Yeah, I haven't had issues with any of them. I mean, sometimes with a long-term disability, there can be some issues. Like, I don't think we do ODSP. I don't think we do. Like maybe a private insurance, I think I've been able to fund, but not ODSP. We don't like that. What's CTB?
So child tax benefit, the
Yeah,
children
we do that.
need to be 15 and under, though. We need to like know that there's going to be 3 years of that. And they're also
Foster's
message foster, maternity leave, that sort of a thing.
Yeah, that's fine. Maternity, we just
Yeah.
need a return to work date. I think we're doing 60%, I believe. Yeah.
Yeah, and foster can be tricky too. So that'll be on a case by case basis. There's certain requirements, but yes,
Yeah.
we do look at those. And then Bindu asked whether Manulife One was portable. I answered that one in the chat just to say that yes, it is. That's where Greg comes into play. Again, Robert and I can do those introductions to have the Manulife One ported over. Great thing about that is that if the client is utilizing the Manulife One as their main bank account, none of their debit cards change, their account numbers don't change, their income can still go in. We're just porting it over to the new home. And again, legals and appraisals are then covered as well from a client standpoint. So a really great option for clients.
So if it's a straight port, it's going to go to the life events team. If it's a port increase of at least 50,000, then Greg would handle it, correct?
Yeah. Arlen, Laura has a question for you. She wants to know if you can start a volume bonus for people who call you with deals that you never agree to do.
Yeah, unfortunately, Laura, we don't do commercial construction. So we'll talk about it offline. Let's see.
That's an offline question. And then Amanda, you had a question here that said, I've heard you do ratio exceptions on the standard M1, not an SBO or EA. You are 1,000% right. But Robert, I'll let you handle that.
Yeah, ratio exceptions are tough. If it's a really strong file, I mean, we're not going to go to 49 like Scotia's going to go, but you can get a few basis points if it's a strong file. But again, we're not going to do multiple exceptions. So really keep that in mind. I've never had an exception on ratios on an equity file. FSR's not crazy about these files to begin with, so it's hard for us to discount those as well. The one thing I will mention to you guys is it's great. I mean, people love our equity programs, but it's really important to send other files as well. Send conventional man ones, do select files, insured, insurable. Our VRM rates are pretty good. They're not best in market, but they're okay. But again, we want to limit it to 25%. And it doesn't mean if you send in an equity file, the next 3 have to be standard files. But over the course of the year, if you have too much in the equity files, if that's all you're using this for, you're going to get flagged as a broker of concern, and you might lose your Manulife registration. So really, really important to keep that in check throughout the year.
Yeah, and to your question, Amanda, like, yes, it is easier to get a ratio exception for our standard program just because it is a conforming program that we offer.
What are we like, whenever my ratios are out, Robert knows this. I'm like, what is going on with Jillian? Why are my ratios always out? Because the team said, oh no, you can get ratio exceptions. I said, on what earth do they just not give Amanda Loss in them?
Yeah.
So what could
you actually have a golden
good
star
file?
Beside your name that says
yeah, they
no
do.
ratio
They have like a
exceptions.
asterisk, like decline. But Robert, what is considered a good deal?
Well, I mean, if we're not consolidating a lot of debt, you have good credit scores. Again, there's a lot of factors that go into a good deal. Everything is case by case, right? And you have to remember, a lot of you probably, when you submit files, you get certain ratios and then it comes back and the ratios are not exactly the same. So we're always slightly higher on our ratios, but 1 or 2 points is possible. But again, everything has to work on the file. If there are multiple exceptions, you're not likely to get that one. So it's hard to give you a direct answer. It's just all case by case.
And one thing I will note that we didn't mention in the presentation in regard to our small business owners and equity advantage programs is that there is also a limit of $1 million. So we can't exceed that. It's very, very difficult to get an exception to go over and above that $1 million threshold. Whereas if you do have a client and maybe their ratios are just slightly over 3944 and they need, a $2.5 million mortgage, then maybe we're looking at doing it under our standard program and getting a ratio exception, because that goes up to $3 million as of right now. But it's going to be more difficult to get that exception for, again, the SBO or the equity advantage one.
The challenge we have with business owners, accountants are trying to get their clients to pay the least amount of tax possible and show the least amount of income. That's usually a challenge when it comes to lending. That's why we have the extended ratios to begin with, but there are minimums, right? The clients have to show 25,000 before any add backs for a corporation. It's just challenging a lot of times to show that income. Did we touch on professional corporation? Do you guys want to talk about that for a bit?
Before we touch on that, I'm going to throw another question to you that we got in here. Existing clients, so clients already have a Manulife One mortgage on their current property. They have converted that one into a rental now, and they have purchased another property. I'm assuming their new primary. They're asking whether we can do a second Manulife One or equity advantage lending for those clients on the new property.
It's a second property, not a rental. Yeah, we can have two, right? We can have two. We can have an owner occ, and we can have a second home for sure. Yeah, we can do that. We can do that. Did you want me to touch on professional corps or no?
Sure. Yeah, I mean, Arlen, unless there's anything else that you wanted to review or.
No, I think we covered everything. I think that, there's, in closing, I think, collaboration is key right now. The brokers that think outside of the box and leverage their lending partner strategically, in ways that, we described here. There's way more examples for Tembo and Manulife to collaborate. We could be here for days talking about various scenarios. I think the point, I guess, of this whole presentation is that collaboration is key, just not between just brokers, but lenders as well. And if we can all work together to find a solution for your client, everyone wins. Your client especially is the main winner. And you look like an expert as the mortgage broker. And so keeping an open mind and leveraging various solutions. And that's pretty much it. Call us for your deal. Let's structure your next deal together. Call Jess, call Robert, call me, and we're all happy to hop on a 3-way call.
Yes.
Yeah, and just adding, this is really easy for us to make a recommendation to Arlen, like very reputable. Tembo's a great company, and again, if it's going to help you get deals across the finish line, it's a win-win for everybody here. So that was a good presentation. Quickly on professional corps, because I get these questions a lot. Doctors, lawyers, dentists, engineers, vets, and accountants. Did I get them all?
Yeah.
I think.
Yeah.
We'll qualify them differently under a standard Man One. Normally we look at the net income, and then we do add backs, right? For a corporation, we're going to add back amortization, depreciation. For a sole prop, we're going to add back 15%. But when you have those 6 professions, we are going to qualify them differently. We're going to start within the corporation. We're going to look at net earnings after tax within the corp. If we can qualify, and that's a 2-year average, if we can qualify the client based on that, we'll stop there. But if it's not enough to qualify, we need more income, and they T4 themselves, or they take dividend income, we will add that as well. So it's not a different program. It's just a standard Man One. We're just going to qualify it a little bit differently. And I've been able to win deals away from Scotia and TD just because we could give the client more money. in those cases. So keep that in mind. Doctors, lawyers, dentists, engineers, vets, and accountants. Got them. Okay. Any other, so we're almost at noon, so if there's any other questions, we'll take them. Otherwise, we'll let you guys go.
Yeah. Thank you
We're
very
good.
much for hopping on the call. Arlen, thank you for putting this together. Greatly
My
appreciated.
pleasure. It was a pleasure having you guys on. And yeah, brokers, thanks so much for taking the time. Hope you found it helpful and looking forward to structuring your next deal.
Take care, everyone. See you. Bye now.
Bye, guys.